It is Wednesday, October 26, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting with today's wrap-up. Starting off with the crude oil, I've been talking about the $49 level here for some time, and we did bounce off of it at least twice so far. The first one resulted in about a dollar bounce up to 50 bucks. I don't know if we're going to hold here again. If we don't, I think we're going to $47, but I got a feeling that there's a chance we could start to waffle higher, in which case I think we could head back up towards this upper boundary of this kind of strange looking expanding type of pattern. So again, it's kind of tenuous situation here. If we can hold 49, I wouldn't be surprised if we have about $1.50 bounce coming. If we don't, I think we could drop fairly quickly towards 47, although it's hard to say how this next leg might lay out. Moving on to NatGas. We did take out $3 today in the December contract, and we're currently trading at 305. So we certainly, let me drop time frames here because it sure looks like we've got the potential here for this bear trap that I was talking about. Boy, is this an amazing decline or what? It's just hard to believe that a commodity can drop almost 20% in a matter of days like this. We've got the report tomorrow. This does not look like a good looking situation. I have to think, based on what I'm seeing right here, as long as we're trading up towards 310, 312, my inclination would be to be a seller. However, I think if we drop below $3 again, you probably would have to consider the long side. But again, I don't know how bad a market this is. If it's a bust, we could be headed substantially lower, and we could somehow argue that 280, give or take, might be a reasonable expectation. 285 we'll call it if the market's a bust. Okay, taking a look at gold, which seems to never really go anywhere. Again, my position on this remains that the market's supposed to go down. I still think we're supposed to go to 1250. Whether or not we're going to have another run at 1280, I don't know, and that may have something to do with the euro. So all I can say with any degree of certainty is this is not a technically sound rally. Every time the market makes a higher high, it comes right off again. So I would only be looking at possible courtesy rally scenarios here. But it's tough because the trend of the market is up. So if you do want to sell it, you can only sell into strength. The sellers are still somewhere here above 1270. 4 might be about the right place. 1274, call it. And again, if we get above 1280, it doesn't make any sense to me with platinum being as weak as it is and silver not going anywhere. But who knows? But for the time being, I maintain that gold is more likely headed to 1250 than it is to 1280. Well, how about the euro? Did not quite get a 100-point recovery yet. As I suggested, the next 100-point move should be up. It's about 75. I think that's the beginning of what should be this larger correction that I've been talking about. That's supposed to take prices back up towards 110.50. So I have to view this as a courtesy dip scenario here. The buyers are clearly sitting, at least basis the futures, below the 109 big figure. And, you know, it's been impossible to make money being short below there up until now. There's no reason to think, at least in my view, there is at this point. So watch for the market to stabilize 109 and then ideally head back up towards 110. Courtesy dip scenario in the euro currency. I had to revise the 10-year count here during the update today as the market just trades like junk and is going nowhere in a hurry. That said, we should come back down and test the 76% retracement and the last low at 109.24, and then from there I suspect we'll head back up again, but this market is just getting to be really boring, hardly worth paying too much attention to. But again, looking for a test of 129.24 in the December 10-year, currently trading just a few ticks above there, and ideally from here the market will turn and rally, but that remains to be seen, and we'll follow up in the morning update. Okay, rounding out the update with the stock index futures. An interesting day today. The S&Ps came right down and tested the previous low, which keeps the market essentially in a sideways to arguably higher trend. However, I'm still bearish on the market. We had an interesting rebound that failed exactly at the 62% retracement today, along with not a very impressive action in the NASDAQ. We've got Google and Amazon reporting, so honestly, what can I say? I don't know. If we do fall below here, the 21-23 level, theoretically that could open the downside to a third wave decline. More than likely, again, with these big names reporting after the close tomorrow, I don't know that we can expect much. 76% retracement is 21.44. That should be about the upside max that we will see. The RSI study, interesting. Also somewhat constructive, and would argue that perhaps the market will trade up. But again, very tough situation. Not the highest probability win at the moment. Okay, and concluding with the NASDAQ, again, whatever I say today, who's to say that it means a thing as we go into these big name reports tomorrow. I talked about the importance of the support level below 48.50, so it's absolutely no surprise whatsoever that the market has stopped going down here. I was looking at the chart on Amazon, and most likely we should get a bullish report, or at least the market should move up one more time. I could see how this could set up a top. I'm not going to bring up an Amazon chart right now, but I think the need to keep in mind here that the 62% retracement in the futures is up near 48.90, and the 76 is back above the 4900 level. So I think the market is going to head up higher. Probably be inclined to play from the long side for this move into these reports, and possibly looking to sell into that, which should be, from what I'm considering right now, positive surprises on both those numbers. So again, if somebody wanted to be long Amazon and Google calls tomorrow into their report numbers, it probably wouldn't be a bad play, but again, high risk endeavors. So that's it. Ron Feinstein, New Wave Forecasting, October 26, 2016.